Now the other kind of the first step then is then the process. Okay. So you want to look and break down the market. Okay. So what's going on in the market. You want to identify the market cycle. So, these are some of the questions you ask them. You say, okay, do you think the market's going up, down, or sideways, or no idea? Well, let's take a current, example. What do you think? What's going on currently right now? Where's the market cycle? Well, the market cycle is up, right? I mean, that's the real kind of simple part of it. And then I like to use 5 different chart patterns that I look for. So then the second thing I look at within this process is identify the chart pattern. So I'll scan, and I'll come up with, maybe volatility squeeze or momentum reversals, and then I'll look at those based on these chart patterns that I've identified and kind of defined. And then the next thing you've got to look, what is your, time horizon? Okay, what's your duration? What do you think in that trade? Is this going to be something kind of a short term, maybe intraday, or it could swing maybe a week, 2 weeks, or is it going to be long term? So, what is your specific time frame, trade duration? And that's going to be based on, your trade. You think it's a quick in and out, or do you think this is something that could trend? All right. So this is a really big question you have to make sure to answer before you put the trade on. So this is just kind of a checklist of the process. And then capital at risk. Okay. So what is your, capital account? Some people may have 5,000, 10,000. John may have 100,000, 200, a million, right? So that's going to make a big difference on how you allocate your trading capital and what trades you take. So that's going to be a big part, capital that you put at risk, and that's going to be then based on market conditions. So you want to also then quantify the market. So we're always going to have some kind of uncertainty or risk, but you want to quantify, is it low, is it medium, or is it really high? Right now, things are kind of low risk. I mean, we've got everything checked the box out of the way. The election's out of the way, some of the big earnings are out of the way, big economic numbers are out of the way. So the risk right now that we see is very low. And then the fifth is, what is your objective? Are you want to be an option trader just to make passive income, or to make to make a return on something that you already have, maybe cover calls? Or is this something you want to just increase your account by taking advantage of the leverage that all options offer? Or are you really in need of some kind of hedging? All right. So these are kind of the steps that I always mention that you should look at, kind of help you make things more mechanical.